Remember cryptocurrency? It used to trade. You would not know that, though, by the past couple of weeks of trading. That's because Bitcoin's trading range has narrowed to the tightest it's been in months. Well, joining us now to discuss this and whether it'll ever wake up is CEO of AI quant-based liquidity aggregator Fluid, and his name is Ahmed Ismail. Good morning, Ahmed.
Good morning.
So this has been maybe the most boring market in a long time. Glassnode data said that in the past week, from highs to lows, 3.4%. I mean, that's almost, in crypto world, that's negligible. I know in the equity markets, that's almost interesting. What do you think is happening here? Why is it so boring?
I think there's a range of narratives that are happening right now. I personally think that the Jump Crypto and Jane Street news, as you know, they pulled back their operations over US regulatory uncertainty. That certainly made a big impact on the market and liquidity. Crypto suffers from generally one of the, a very big problem that crypto suffers with is liquidity being massively fragmented, and events such as this only exacerbate the problem. So what we're seeing right now is a fact that there is not much activity because liquidity is even more fragmented, and markets are very, very inefficient as a result. You will see, I think, we are seeing, with certain narratives coming back, such as AI, even meme coins becoming in fashion. You may see some more institutional participation in crypto, but that's not anytime soon.
Yeah, does the recent, uncertainty regarding the U.S. Debt ceiling, I know this sounds kind of esoteric and almost unrelated, yet it does seem that it might have a long-term effect on raising interest rates, raising that risk premium on borrowing in the U.S., because it adds that bit of uncertainty as to whether what was known as the risk-free rate might not be so risk-free after all. Does that add to the cost of borrowing and therefore liquidate or rather take out from the market that liquidity that would have come in besides Jump and besides Jane Street? Does it kind of scare other people from taking on those leverage positions that they had before, and now that there's a higher hurdle rate to cross? Or is that still kind of not important in crypto?
Well, from what I've been hearing and seeing, I'm seeing that people are expecting a lot of volatility coming soon. There's been a lot of uptake of call options on Bybit. So that's usually a good indication as to the fact that traders are going to expect volatility to come later. And yeah, you're absolutely right. The narrative of people taking liquidity out because they're afraid of what's going to happen with and the uncertainty around the debt ceiling. That's certainly a huge problem or a huge factor in keeping crypto prices so narrow right now.
You mentioned AI. It's certainly a trendy topic as of late. Tell us about how you think AI is going to have an impact on finance and on crypto.
Sure. Well, look, the role of AI despite the boom of the crypto ecosystem, as we're seeing right now, trading and liquidity infrastructure within the virtual asset space is in its relative infancy. And as a result, we see that digital asset markets are highly inefficient, caused by, all the topics that we've just discussed, Jane Street, debt ceiling, etc. So there's an opportunity here to utilize both traditional emerging AI technologies like machine learning and NLP to predict prices, volumes, volatility, and effectively aggregate liquidity, which is what we're doing, Fluid. We're aggregating liquidity across centralized and decentralized venues using AI.
Ahmed, thank you for joining us this morning. That was Fluid CEO Ahmed Ismail.